When we talk about game changers in the tech world, NVIDIA Corporation, NASDAQ, NVDA, is a name that instantly commands attention. Founded in 1993 by Jensen Huang, Chris Malachowski, and Curtis Preem, NVIDIA began as a graphics processing unit (GPU) company. Today, it's a cornerstone of the artificial intelligence revolution, a leader in high-performance computing, and an essential component in gaming, data centers, and autonomous driving. Let me walk you through why investors, especially those looking at long-term growth, are paying very close attention to NVIDIA. We'll look at the company from multiple angles: fundamentals, financial health, growth potential, valuation, and performance metrics. Not as a dry data dump, but as a human, thinking through whether this is the kind of company I would put my money into. First, let's look at the fundamental metrics, which give us a clear picture of how profitable and efficient the company is. NVIDIA's earnings per share, EPS, has seen tremendous growth over the years, reflecting its ability to generate profit from every share outstanding. As of early 2025, NVIDIA's EPS stands above $12, thanks to booming demand in AI chips and data center applications. This is an impressive climb from just a few dollars per share a few years back. Their price-to-earnings (PE) ratio, often viewed as a barometer of market expectations, is on the high side, north of 60. That's expensive on paper, yes, but high-growth tech companies often trade at premium multiples because of their explosive potential. Revenue has exploded, driven by surging interest in generative AI, machine learning, and accelerated computing. NVIDIA's recent quarterly reports show revenues exceeding $20 billion, a year-over-year growth rate that many companies only dream of. Net income has also expanded impressively, with recent quarters hitting multiple billions, a testament to NVIDIA's high-margin business model and pricing power. While dividend yield isn't the attraction here, NVIDIA's dividend is modest and often overlooked. It's a sign of financial stability that the company is confident enough to return some cash to shareholders. Now, let's talk financial health. NVIDIA maintains a strong debt-to-equity ratio, currently under 0.5, meaning the company uses relatively little debt compared to its equity base. This makes it less risky and more resilient during downturns. The current ratio is well above 2, which tells us NVIDIA has more than enough current assets to cover its short-term liabilities. Great news for investors who value liquidity. Perhaps most important is free cash flow. NVIDIA generates billions in free cash flow each quarter, giving it the flexibility to invest in R&D, make strategic acquisitions, or return money to shareholders. This cash cushion is a huge asset, especially in a sector where innovation demands continual investment. Now here's where NVIDIA really shines: growth metrics. Few companies in the world are growing at the pace NVIDIA is today. Revenue growth over the past 5 years has consistently outpaced most competitors, and even among the tech giants, NVIDIA stands out. Analysts estimate compound annual growth rates, CAGR, well into double digits. Earnings growth mirrors the trajectory, fueled by a scalable business model and exponential demand in AI infrastructure. Then there's market cap. NVIDIA has now joined the trillion-dollar club. That's not just symbolic, it reflects investor belief in the company's staying power and relevance in future tech landscapes. Let's shift to valuation metrics. Critics often say NVIDIA is overvalued, but it depends on how you interpret the numbers. The price-to-book (PB) ratio is high, above 25, but book value doesn't capture the intangible assets like intellectual property, patents, and brand equity that define NVIDIA. More telling is the PEG ratio, price/earnings to growth, which adjusts the PE ratio based on growth expectations. NVIDIA's PEG ratio sits around 1.5 to 2, suggesting it's not wildly overpriced given how fast it's growing. In other words, you're paying a premium, but for a premium quality business. Then we have performance metrics. NVIDIA's beta is approximately 1.7, making it more volatile than the overall market. That's a double-edged sword: greater potential for upside, but more risk in downturns. It's something every investor needs to factor in. As for the 52-week high/low, NVIDIA has recently hit all-time highs, but its lows were more than 50% below those levels. This volatility reflects broader tech cycles, investor sentiment, and macroeconomic factors, but it also underscores opportunities for those who believe in the long-term narrative. Now, let's talk personal perspective. As an investor, when I look at NVIDIA, I don't just see a chip maker, I see the infrastructure of the future. The company's dominance in GPUs is now spilling over into AI accelerators, self-driving technologies, and the metaverse. They're not just riding the AI wave, they're helping create it. Their partnership ecosystem, from cloud hyperscalers to automotive companies, demonstrates how deeply integrated NVIDIA is in modern tech stacks. And while the stock isn't cheap, I believe quality comes at a price. If I'm investing for the next decade, NVIDIA looks like a company I'd want in my portfolio, not just for potential capital appreciation, but for its role in transforming entire industries. It's not just about making money, it's about being part of a technological revolution. In conclusion, NVIDIA is one of those rare companies that seems to fire on all cylinders. The fundamentals are strong, the balance sheet is healthy, growth is astounding, valuation, while stretched, is justifiable, and performance speaks volumes. There are risks, of course, competition, regulation, global supply chain issues, but those are the kind of calculated risks that come with investing in innovation. So, is NVIDIA a buy? For those who believe in the future of AI, autonomous systems, and high-performance computing, it's not just a buy, it's a long-term conviction. As always, do your own due diligence, but for me, NVIDIA isn't just a stock, it's a vision worth investing in.